What's up, good people? It's your boy Larry Jones. Hey, haven't been posting every day. Taking a little R&R here in cloudy Florida, but I'm going to be doing some traveling and trading because it's too much to talk about. Hey, Robinhood went on a complete rip. And for those of you that did invest in Robinhood, congratulations. I decided not to invest in Robinhood like I forestated for personal reasons. I'm just not going to invest in it. An absolute rip. I mean, you literally could have doubled your money in Robinhood. But I still stick to what would have been even better, and that is never buying an overhyped IPO on the first day. It's just never a good deal. So some of you guys didn't buy it on the first day, waited to the dip, you bought it, and now you're over 100%. So congratulations to you guys. But when you have like the S&P and the VIX high at the same time, the stock market is very resilient. But I still say that we're at the top. We're trading at the top. These earnings reports just keep killing it. And the ones that should be running are not running. And we're just going to be balancing the boat and getting into other stock that we're not normally in. So if the Dow, the S&P, the NASDAQ are running and they just keep running, but you are red, that means that you just are in all of the wrong stock at the right time. That's why there's something called rotation. You're supposed to rotate into one stock from one stock to another, right? But if you're just in tech or just in high growth or just in EVs or just in banks, it's not a good deal. And so that's why we are going to just take some time and not look for the hot stock, but we're going to look for balancing the bulk of people. Tomorrow's video, we're just going to start looking at some other stuff that we should be looking at, okay? We're going to start that tomorrow. I did some filming before I left so I can post some videos while I'm gone. So that's what we're going to be looking at, right, good people? And so I want you guys to start thinking about that. And what we're going to do is this. I'm still saying we're at the top. And so for every dollar that you invest right now, should I say, because I'm not your financial advisor, this is Larry just talking about what he would do. For every dollar that I would swing trade right now, I'm keeping $2 in the kitty, meaning that an extra $2 of fresh powder, fresh money, not in a bank account, but in your trading account. Because when the market does pull back, and that could be next year, it could be next week, it could be in 2 months, no one knows. When it does pull back, Larry is going to be cashed up and I'm going to be ready, right? But you have to have a plan ready now before it happens. So that's what we're going to be doing. I'm not looking to get 1 million views on these next few videos. We're going to talk about ETFs. We're going to look at stuff like FANG, the big tech companies that have not risen or gotten hit. What'll happen is when there's a pullback, they'll be further discounted. And I believe that everybody should have some FANG, Facebook, Apple, Google, Netflix, big tech companies. Everybody should have some of that in your portfolios. They perform well year over year, right? But we also got to look at some ETFs. I'm telling you, some of these ETFs and funds are killing it, and you just don't know, for those of you that are new. So that's what we're going to be looking at, good people, okay? So I want you guys to go ahead and hit the like, subscribe, notification bell if you're new. And I want you to check out all the links below, especially WeBull if you don't have a trading platform. Just deposit $100. As a matter of fact, you can deposit as little as $5. And they have fractional shares, pre and post market trading, and all that great stuff. All right, good people, we're going to leave it right there. I'm going to post a video tomorrow and then another video the day after that. And then I may be popping in and out with these short videos. All right, good people? Love you guys. Live, love, laugh, and learn.